If you listen to the chatter, we're in for a 2.5 year bear market, right? What if it isn't going to play out like that at all? I believe it's going to be quite different than that. So join me today as I discuss why. Welcome to the Crypto Rain channel. I'm your host, Jay Rain. And if you like money and you like crypto and you're looking for a real investor take on the crypto market, join the Rainmaker family. You can do that as simply as liking this video and subscribing with the all notification button enabled. Now, I'm not a financial advisor. I'm a crypto investor myself. I think you already get that. I do own or plan to own most of the cryptos I frequently talk about on this channel because I don't talk about the projects I don't believe in. Thanks to our Patreon members, we do have a private Discord there. Patreon members get access to. Now, it does say often at the beginning of the show that there's sponsored content on this. This is because our strategic relationship with OneChain, best cross-chain compatibility and cross-chain bridge technology out there. Now, make it rain on that like button, strap in for the show. I've been at NFT NYC this week, and it's been great to see so many projects working hard and committed to this space, especially during this down period when not a lot of new money is coming in. It was also great to meet a few of you in the audience, and especially Pete, who has been a Rainmaker for a long time, and really good to meet you, Pete. Now, in crypto, I joined in 2017, and I've seen the full gamut of swings. You can look at the charts and really get a feel for what has happened since then, but really experiencing it teaches you a lot. And I know right now things are down and people feel so sure that we're in for a longer bear market. The economic times, as far as the macroeconomic times, look bleak. Inflation is crazy. It looks like we're entering a recession. So a lot of people are just buckling in for a 2.5 year bear market. But is it really going to play out like that? Because I don't think it is. I think there's going to be a major catalyst, a couple things, but one major catalyst that's happening early next year that is going to change things quite a bit. And it's going to kick us out of this crypto downturn. It's not going to affect stocks. It's not going to affect other things, but it is going to affect crypto massively. Now, is it fair to say that we've seen some institutional adoption of Bitcoin in the past 2 years? Tesla, Michael Saylor, a few others, right? But did we have real institutional adoption yet? Fair to say it's not even close to that. Now, there are a few massive things that are holding that back. One is the lack of regulatory clarity, and that one always gets mentioned, right? But there is something else far more important that rarely gets mentioned, if ever. Now, in the accounting world, there's a classification called an illiquid intangible asset. Now, I'm going to use an analogy to explain an illiquid intangible asset and the problem that this creates on a company's financial statements. Let's say a Charizard Pokemon card, the shiny one, I can't think of the exact word, that sells for a lot. Let's say a company buys one of those for $50,000 and they have it on their books. But then later the price drops temporarily and one sold for $10,000. But then the price for that shoots up and is now going for $1 million for equivalent condition of what the card this company is holding. Now, for accounting purposes, what price do you think the value has to be marked to on the books? Would it be the purchase price of $50,000? Would it be the lowest price of $10,000? Or would it be the most current price of $1 million, which is what would make sense? Yeah. No, the $10,000 is what they have to market to. Do you see the problem? I think you do, right? So if you were a CFO and let's say you invest in a lot of Bitcoin and you buy at today's price at 21,000 and then it goes down to 15,000, say we have another strong wick down, but then it goes to 200,000, what price do you have to reflect as the value of that Bitcoin on your books? 15,000. Now, it isn't that you can put, it's not like you can't put pages of explanation in there in your reports on how the price reflected for Bitcoin on the balance sheet doesn't reflect the true value. But people don't often read the extra pages. All they see is that your numbers are way in the red, even though you're way in the black. You're way ahead. You made a great choice over sitting on that cash. You made some really good choices, and now that's worth so much more. Do you see why so many CFOs just steer completely away from this? Do you realize that if they buy it, and even if they're up, but it looks like they're down, there's a high risk that they just get fired and let go. So a lot of CFOs won't go anywhere near Bitcoin, even if regulatory clarity gets a little bit better. And there are some that feel comfortable buying Bitcoin if it weren't for this accounting thing in the way. But this February, the board that makes the accounting decisions on how these things can be accounted for on the books, well, it meets in February. And it's going to be a big deal. I know a lot of people don't think about this because you haven't been in the financial space and you haven't been a CFO. So why would you think about these things? But know that these problems are out there, and it's part of what was holding back institutional adoption. Because I asked myself, why did we only go to 70,000? This bull run, that number doesn't make sense. It should have hit much, much higher. So that means there's things that are in the way, and part of that is lack of regulatory clarity. But part of that was it couldn't really get adopted massively by institutions. What were the barriers holding that back? And it makes sense that this was one of the massive barriers. But as this barrier gets removed, because really we should have hit 150 to 200,000. If you just look at the progression of Bitcoin's price from cycle to cycle, I still think the stock to flow ratio, this Plan B stock to flow model has it right. I just think that there's some other macro things that are holding Bitcoin's adoption back that weren't reflected in Plan B's stock to flow ratio. But as those things get moved out of the way, it often leads to a boom, and sometimes even an overboom, and that has to correct, because I really think that right now Bitcoin is vastly under Bitcoin's true value. And if I'm right on that, and I'm pretty sure I am, sometimes when it then booms, it actually catches too much momentum, because green candles bring new, fresh money in all the time. They shouldn't, but you know how they do, right? Should isn't really the word. Whether it does happen or not is what you got to look at. And so as institutional adoption happens, it's really going to be big for crypto, because green candles create more people chasing the green candles, which create higher green candles and perhaps an overboom. Wouldn't that be nice? But I think at this point, we'll just take a return to like 65,000, 100,000, and what that would do for the altcoins. We'll see where this goes. But part of the thing that I think about all the time is the market takes the most amount of money from the most amount of people. With so many people expecting a longer crypto winter and bear market, what does that tell you is probably not going to happen? A longer bear market. Makes sense? Well, thank you everyone for joining us. I know short episode today. We'll be back to our normal schedule when I get back in town soon. Guys, love you all. We'll do our wand chain giveaway next week and the last 2 times. So we'll be giving away a lot more than normal next week. So stay tuned. And remember, no rain, no gain.
Came into the space chasing all of the gains, chasing the pumps and all of the hype trains. But like in life, right before you could, was told to buy when it was pouring like a rain.